Hi, and welcome to Beyond the Falls podcast. I'm Sarah Jenkins, and today I've got Andy Burton with Waterstone Mortgage joining us. So thank you for coming on, Andy.
Thanks for having me as a guest. I'm honored. I'm excited.
I'm excited for you to be here. I'd like to start out by asking you, what is your connection to the St. Croix Valley area?
Great question. So I grew up in Hudson, so I lived there a long time, and I've always lived pretty much within the St. Croix Valley area as well. My wife Justine, she grew up in River Falls, or up until she was like early teens. She went to West Side.
Yes.
Her family eventually ended up moving to Beldenville, El Paso area, so not too far away, but changed school districts, and so a lot of my life surrounds around River Falls too, just for family, as well as I also have family that grew up and lived here too. So just the whole I love the whole St. Croix Valley area, the mixture of small town. You know, I still live here. I live in Lakeland Shores, so not too far away from here, just on the Minnesota side. And I just love to be able to pop between all these small towns, and then have the mix of being able to go to the city, right?
Yes,
and go
absolutely.
to the metro.
Close to everything. Yeah. You know, a little distance, but you're still close to getting to everything. So
absolutely.
Yeah.
So.
I want you to tell us, Andy, how'd you get into mortgages, and tell us about your story.
Yeah. So I know you've heard my story, but I'll share.
I think it's neat, and I want you to share it.
Yeah, thanks. The Reader's Digest of it real quick. So I was a union construction worker, and I knew at the time that really wasn't maybe the best fit for me. It was an awesome job with great people. It wasn't maybe the right career for me. And while I was a union construction worker, I was kind of a hellraiser and liked to, drive fast and take chances. And one day I was driving a motorcycle 150 miles an hour, and I came up and over the top of a hill and jumped to the hill and got head shake where the bike shakes. And I put it down on the asphalt, and I slid and I hit a tree, and then I spun around and I hit a driveway culvert. And the driveway culvert cut my right leg off and threw me in someone's front yard, kind of partially in the ditch. And I was really fortunate that someone was driving by and was able to pull over, and they got rubber tie-down straps and like tourniqueted my leg. And I'm laying there in the ditch. I'm like missing my right leg. My left leg is basically in the shape of an L, like skinned all over. And they stabilized me, and I was so fortunate that one of the people that stopped was a former first responder. So they knew what to do. They called 911. They actually called my parents too. And the ambulance showed up. They packed me up. They couldn't find my leg, so they had to so everybody's looking around like, where is his leg? And they ended up finding it 13 feet inside the culvert. So they had to get like a fire hook and like hook it out and pack it on ice. I know it's rough to hear. So they packed my leg on ice with me as I'm screaming, I don't want to die, and like in shock, but I'm not in pain. It's kind of weird to explain. And then they stabilized me as best they could, and they shipped me from north of Hudson, and they just sent me straight to Regents Hospital. They couldn't get the medic helicopter, so they had to drive me all the way there.
Oh my goodness.
Yeah, shaking on the way, like profusely, and eventually they intubated me on the way, so I thought I died. And I saw the light, and I was losing a tremendous amount of blood. And fortunately, the doctors and the emergency staff at Regions were able to stabilize me, give me I think it was 13 units of blood. And I had, 12 hours of surgeries in order to kind of start patching me back together.
Yeah.
And that was like the first step in my new life that I got to have. It was kind of like a reset for me of what was going on. It was a long recovery. Had my grandma live with me for a long time because my parents, eventually they tried to take care of me, but they had to go back to work too. So my grandma came and stayed with me and helped me recover. And I eventually had to learn how to do everything, like a lot of the basics. I had occupational therapy to do things in life. I laid in bed for a long time. Had a bald spot in the back of my head from laying in bed for so long. Yeah, and I transitioned to an electric wheelchair was amazing to be able to have some freedom to be able to get around with electric wheelchair. And Eventually I worked my way to a normal wheelchair, and then a walker, and crutches, and then a cane with this new prosthetic leg that I got. But my left leg was broken too, so I had like a cast on one leg and then prosthetic on the other.
Yeah.
It was a mess.
Wow.
I was a physical mess, but I recovered pretty quickly. And how does that transition into real estate and mortgage then, right?
Yeah.
So that's when I started looking, okay, what am I gonna do with my new life? So it had been probably about 3 months of recovery. So my brain was great. My brain was doing good because I was wearing a helmet, but my body was beat to hell, right?
Yep.
So then I had to figure out, how am I going to enter a new career? So I ended up kind of pursuing a couple of mentors and a few people that I know, and get an introduction from a friend to someone in the mortgage industry, and that kicked it off for me.
Wow.
Yeah, and so I got to enter into the mortgage industry in 2005. The real estate mortgage market got completely pulverized by 2007, 2008. So that was a weird time to get into it. But amazing at the same time, of being able to watch and see what people did right, what people did wrong, as in the industry and the consumer.
Yep.
Yeah, and I got to grow during that time. So now I'm 19 years in the business with the team, and we have a top producing team, and we've been, top 10 purchase mortgage, independent loan officer in Minnesota for like 5 years in a row.
It's incredible. Congratulations.
Yeah, so it's pretty cool.
It is cool. It's very cool.
Yeah, I serve a ton in Western Wisconsin. So my business, so even though I office in Woodbury and I live right here, my relationships, so many of them are here.
Yep.
Right, so about half of my business is Western Wisconsin, about half of my business is in Minnesota.
Oh. Quick question, because I don't know the answer. Are you licensed in other states other than Minnesota and Wisconsin?
Yeah,
Okay.
So our company, we're licensed in 48 states.
48 states.
So we end up helping people that move from here. Specifically, have helped people move right from River Falls, out of the area.
Yep.
Whether it be like Tennessee, I think like the relocation hot spots, which is like Tennessee, Florida, Texas, Arizona, like there's just Colorado, there's certain places that people seem to leave the Midwest for.
Yep.
Yeah, pretty consistently, or North Carolina, South Carolina, it's popular too.
So you can help pretty much anywhere or in the U.S.
Yeah, we do loans everywhere.
That's awesome.
Yeah.
If I were a first-time home buyer, kind of tell me what the process looks like if I'm just coming to you from the beginning, and kind of what to expect as I get pre-approved to go buy a home.
Yeah. So if you're a first-time home buyer, something really clear is most people are super nervous.
Yes.
They're like freaked out.
Yes.
They're so afraid, of what we're gonna say. It doesn't matter if we say yes, no, or maybe to us. And I think people think that we care. So it gives them like a pressure so much on themselves. So what we typically do is we talk to a client first, understand their goals and their needs, and then we go over a credit application with them. If they're worried about their credit, we can do a soft pull on their credit too, so they don't have to worry about getting their credit dinged by a few points. Then usually we're setting up a consultation where we go over everything with them, anywhere between 30 minutes to an hour, either in person, just like this, or a lot of people do it on Zoom now.
Yep.
Yeah, where we're just on Zoom. You can have maybe yourself and a partner in a different location to be able to go over the numbers, the process, and go over a plan.
Yep.
I think the biggest thing that we do for a lot of our first-time home buyers is it is not uncommon. We could be talking to someone a year in advance of them buying a house.
Sure.
Yeah, where we're looking at it and saying like, okay, you need to maybe fix your credit, or maybe you need to save a little bit more money down, or you need to pay off some debt, or they're just really being proactive on planning.
Yep.
Saying like, you probably run into the same thing.
Yes.
Yeah. Where it's like my lease, right now, it's midsummer 2024, wouldn't be uncommon for me to be talking to someone that's looking at buying next spring.
Yep.
But what I will say is if everything lines up and the stars are in alignment, like, okay, your income's great, your credit's where it needs to be, you know, you have your down payment saved. It's funny how often I give someone a pre-approval on the spot and then they figure out a way to break their lease. As a landlord, you're probably like, ugh. But like once they have it, it's like they get the golden ticket and they're all fired up and they're excited and they're like, I just want to go buy a house right now.
Yes.
Yeah. Because this time of year right now is actually like the best time to buy because inventory is like normally seasonally kind of peaking.
Yep.
So then sellers got to negotiate just a little bit. They're not giving the farm away, but they're, you know, 3 months ago.
Wiggle room.
Yeah, 3 months ago there's like no wiggle room. It seems like, right?
Agreed.
Right now, if you're still on the market and you've been on the market for like 3 weeks or a month, it's like you'll negotiate.
Yes.
A little.
Yes.
Yeah. So it's exciting for the first-time home buyer. This is like first-time home buyer time right now.
Yes, absolutely. What kind of forms, if I'm coming to you, you mentioned Zoom. I know, you know, technology's awesome. I know we can fill out an application online. What are you going to expect from a first-time home buyer to submit to you? Like
someone who has a job, you know, usually you're going to be looking at 2 years W-2s, a month worth of pay stubs, and 2 months bank statements, eventually driver's license. Or if you're going to be getting a gift, you don't need to have that now.
Yep.
You just would let us know you're going to get one. Or if you're self-employed, I'd dig up the 2 years tax returns that you have. If you have like a S Corp, you have what's called a K1 that goes with it. But we can walk the client through, but it's really not as much paperwork as you may think, because in today's digital world, most employers have switched. Not all, but most have switched over to like a digital payroll system.
Yes.
So they have like an app on their phone. They can actually download their pay stubs. They can download their W-2s. Same thing with bank statements. It's like our post-COVID digital world has made it actually easier for someone to go through the pre-approval process.
Yep, definitely. And I feel like I even see it on my end, how much quicker it happens for everyone. And that's nice, and it's streamlined with you guys. And
totally. So it takes sometimes more for us to give the consultation and go over the plan than it does for them to generate the paperwork.
Yep.
Right? To make sure you have, it's like, all right, you can get the paperwork quick, but let's get you the right plan.
Yes.
One's going to be right for you. Not just like push a button, get a mortgage. You don't want to do that like that, because then it may not be the right plan for you.
So speaking of first-time home buyers, what are some ways, you know, rates are high, inventory is low. What are some ways, you know, you can help first-time home buyers maybe get through this current market that we're in? Yeah,
so usually the biggest challenge for first-time home buyers is down payment. It's not actually payment, because a lot of them are stuck in high rent.
Yep.
Right. So most of them are very comfortable with where most mortgage payments are at for their expectations. So sometimes expectations can be a little higher and we have to reset that, but it's usually down payment.
Yep.
Down payment or credit score. Usually they already have a job, right? And so then it's us looking at what options are available. So in Western Wisconsin, you get the USDA zero down mortgage. So you can get 3% down conventional, 3.5% down FHA. There's even some down payment assistance available for some of those programs, which is pretty cool. Fannie Mae just released one. We've closed a few this year where if you're 50% of the area median income, you get a $2,500 credit automatically.
Oh.
You don't even need to apply for it.
Nice.
So, yeah, it's super, super cool. And if you're a veteran, which is 10% of all buyers, they have 100% financing available too. So there's more options out there available. Usually the client needs to be educated on, hey, where can we get the money from?
Yes.
Right. So, and the average first-time home buyer, do you know how old the average first-time home buyer is right now?
I don't actually know.
38 years old.
Wow.
I know. It's a lot older.
I was gonna guess early 30s.
Yeah, it's progressively gone up.
Yep.
So usually actually those first-time home buyers have savings.
Yeah.
401ks, IRAs. It's just educating them on what can you access to buy a house.
And you walk them through maybe helping them make the decision on what's going to benefit them the most in the long run.
Totally. That's exactly my job.
Yep, it's awesome. Having said that, and I did mention rates are high, and I know you don't have a crystal ball, Andy, but what are your predictions on rates? Yep.
I looked at the average mortgage rate in America for a 30-year fixed. If we speak averages is best, it's about 6.8% today. And I was looking at forecasts for next year through Fannie Mae and the Mortgage Bankers Association. You know, they have economists that they pay millions of dollars for, so I'm going to rely on them more than my gut feeling.
Yep.
And they're saying that rates are going to be high 5s, low 6s by the end of next year.
Okay.
So a little bit of a reprieve, but not as much as what a lot of people think is going to happen.
Yep.
Inflation's been sticky. Like it's getting lower, but it's not dropping through the floor.
No.
So as long as inflation is there, rates are going to stay, you know, where they're at. But I think the days of like 2s and 3s, even 4s, that ship has sailed.
Okay.
Right? Like that took 30, 40 years for that to come around. It might be a while.
Till we see, if we see it again.
I think 5s and 6s could be our new normal.
Okay. And historically, 7 and 8s are average.
Yeah. Historically, 6s are normal.
Yeah.
Yeah. So, but it's hard to stomach with the prices of where they're at.
Yes, because they have. I mean, I think I just read a stat maybe 2 weeks ago where your average homeowner has about $200,000 in equity, just, you know, just as a gauge. If you bought in the last 5 years, it's like those values have skyrocketed. So
how many people come to you and say that I have all this equity and I want to move up, but like I don't know if we can afford the next house because of rates?
Yes, I get that frequently. For an example, I just had, you know, blended family. So they had outgrown their house. Just they got married and not enough bedrooms for everyone, and they had a home to sell, so they had enough equity. It made more sense for them to sell that home and put that equity into the new home. I don't even know if their payments went up all that much. Because they had so much equity to put down.
Yeah.
So, yeah.
It's a common challenge that we see with people. That we're seeing that someone comes to us that it's like a need to move market.
Yeah,
right?
Yeah, it is, yes.
Yeah, like, so it's like first time home buyers, like the move up buyer who, exactly what you said.
Yep.
It's usually like the move up buyer who either relocated or they had another child or they got married. So then it's like, I have this size of home and now I need this size of home. Yeah. And they're like, but I have 2.5 and I don't want to go to 6.8. And they're like, ugh. You know, like that new payment is scary. They went online, they did some mortgage calculators. People are savvy now, right? Like they go online and they do calculators and they're like, my payment's going to go from $1,500 to $4,000. And they say, oh my gosh, I can't do it. So, but that's like a daily conversation like that I have. And usually we're jamming on numbers for them. And that's part of that consultation. Like you were saying, 200K in equity. We're saying, okay, if you're going to sell this is common for River Falls. I'm selling at 300, right? I have my starter home that I fixed up, but since I bought it in the last 10 years, I paid like $150 for this house. It's crazy, right? Like now it's worth 300, but since our basis is 150, we owe 100, but we're going to sell it for 3. So if you're this move up buyer, this is for you, but you're going to go to 5 or 6 now to get that move up home. So usually what we look at is maybe you should harvest some of that equity and clean up debt. Because a lot of the times this is like in your spending time of your life, you're like 30s and 40s, where you're getting the car, you're getting the boat, you got some credit cards, maybe some student loans. And we're looking at like, should we just clean up that debt? Like maybe that's 50 grand.
Yep.
Because you're like the end of some of those payments, and all of a sudden you're saving like $1,500 to $2,000 a month. So we just term out that debt when you sell, to be able to buy the new place. And those are the people that I'm seeing get offers accepted now, because you can get a contingent offer accepted.
You can, it's true.
Yeah, right?
That hasn't happened in a while, but yes.
Yeah, for like 2 years. Those people just said, I can't do it, because you just get crushed in the marketplace because you couldn't get a contingent offer accepted. And now it's like their time to shine. So then we're able to say, hey, yes, you are going to have a higher payment, but since you got rid of all the other debt, and then maybe even keep like 10 or 15 grand for savings, like extra savings, because it's not going to be very many times in your life where you get an opportunity to have 200 grand in cash, because it's tax-free money, so you don't have to put it in your house. So that happens a lot. Like I just had a veteran buy in River Falls where they sold, and I call them equity sellers. They cashed out all of the equity. They paid off over 100 grand in debt.
Wow.
And kept like 50, 60 grand to fix up the new house. And then so they bought the new house 0 down, all the debt paid off, kept the cash, and now they get to fix up the new house. And when they look at like their global payments, all of their payments, it's cheaper. And they get to upgrade their house.
Yes.
So it's pretty cool.
It's an awesome story, because it's like saving you money, but you're getting everything you want.
And it's that, like, the old school mentality would say you shouldn't do that. But I think we just got to look at what's smart financial advice for you, like for you as an individual, not, you know, maybe what your brother or your uncle or your cousin's telling you.
No, that's what we're here to do, is to help people get to that. And
Sarah, right now, what are you seeing as like one of the most common reasons people are coming to you because they need to sell a home?
It is that next step home. So I literally took a call last night, and they are they're ready to move outside of the city and get into their next property. It's a bigger home. I think it's on a little bit of land. They actually have that worked out. It's a family friend of theirs, so I don't really know a lot about it, but that is the next home is usually why sellers are coming to me. Or unfortunately, I feel like I've had a number of a family member's passed away and they're selling. So for the next home, when you're coming in and you're doing like a consultation with them, like how far in advance are they talking to you before they're selling usually? Most people give themselves a little bit of time. I would say usually there's about a month till they want to be on market, unless there is more work to be done. I've got one in particular right now where they know they're going to be moving in 3 to 6 months. Like that is just, they've got everything on their purchase lined up, and so we need to be sold and into the new house in 3 to 6 months. So
if it was you doing it, how soon would you talk to the realtor to make sure you're ready, like the house is ready?
3 months, because I feel like when I go in for that initial consultation, most people aren't ready to put their home on the market tomorrow, to have people through their home, and maybe not ready even on the purchase. Maybe they haven't even found their next home yet. So there's usually some workings we have to do to kind of get everything in line for them to have the smoothest sale to purchase.
Cool.
So 3 months, I would say,
That seems reasonable. So like when you're sitting down, so a lot of people choose you, right? You're one of the top realtors in River Falls. Like what did they give you for feedback of if they interviewed multiple realtors? Why did they choose you?
I think a lot of times, I think there's a real benefit to being on a team. I also think I'm not a team, and so when you call me, you're getting me all the time. It is my cell phone. I'm the one picking up. I do think there's that. I also think I offer some different types of marketing than other agents in the area. I am starting to do more video. I shouldn't say starting. I've done video for a long time, but I feel like I know this market really well. I feel like I am offering different marketing strategies than other agents.
Awesome. How long have you been a realtor?
It's my 7th year.
7th year.
But it feels like a lot longer because my husband, he's a home builder, builds a small amount of homes, has since we moved to River Falls, which was 17 years ago. But he also got into home building in about 2006. And then the market changed, right? And so we got into the securing and maintaining of foreclosures. And so we kind of managed properties for a number of years, transitioned our business into a small amount of home building, and now we do property management, and I've got my real estate license since then. So, so 7 years, but it does feel like a lot longer.
Yeah, why did you shoot up so fast compared to everybody else? Like, I'm saying it's impressive, like how quickly you've grown your business. Like, did you have like a huge network of people already? So you were able to just tap into the relationships that you have?
That's a good question. I feel like when I got my license, I feel like I already had a listing going into getting my license, which helped me and also threw me into it. Like, I learned a lot. And so I don't know if I had a huge network because I feel like I was only here for a few years and my kids were little, and I was kind of I was staying at home with the kids. It wasn't like I was out making connections, but I do feel like there was a shift, and all of a sudden it was like I just made sure I made conversations with people and made sure people knew what I was doing.
So you're just good at networking?
Sure.
Yeah.
I am. I mean, I am.
Yeah.
That is what we do, right? I
Totally.
mean, we talk to people.
I think you're downplaying this a little bit, being modest. Yeah.
Yeah, so I do. But I make it a point. Well, just like you do, I make it a point to get on the phone and call people and connect with people and follow up. Hey, Andy, is there anything else, kind of before we wrap up, anything else you want to share with us?
I think that for most people, if they're even remotely interested in buying a home and buying a new home, getting the pre-approval done is the first step, and just giving you as a consumer permission to just go through the application process to see if it's right for you. I think there's a hurdle and a concern with rates right now that people don't even want to entertain their options because they just assume it's crazy unaffordable, when we can look at even like interest rate buy down options for clients is huge right now.
Can you tell us, just elaborate a little bit more on what that is? I was going to ask you about that and I forgot.
I'd love to.
Yes.
So there's buy down options of like 3-2-1, 2-1, or 1 year. And what they are is they're paid for by the seller. That's key.
Yes.
The buyer's not paying for it. Where you can get a 3% rate reduction from the market rate. So like we were talking about, average rate's 6.8. So if you could lock at 3.875 for the first year, which is amazing.
It is.
Then you go to 4.875 second year, and then you go to 5.875 the third year, and then the fourth year you're going back to your original locked-in rate. So it's like a graduated payment plan, basically. And we see builders in the area offer this. I've closed multiple builds in River Falls on that exact plan, which is awesome. And the 3-2-1 is the most expensive, 2-1 is the most common. So 2% rate reduction. So right now it'd be like 4.875 to 5.875. So it's like a bridge. It helps you go through that first kind of leap of affordability that's a little tough sometimes to swallow. So, or rates may come down and you might be able to get an opportunity to refinance in between. But those are the kind of options that we got to look at for everybody. To be able to look at, like, hey, let's look at your unique situation, do a soft pull in your credit so you don't have to worry about that, and just look at the options for you.
Love it.
Yeah, cool.
Awesome. Well, thank you so much for taking time out of your day to join us today, Andy. And we'll see you on the next episode of Beyond the Falls.
Thank you.